Today we're going to discuss a topic I get asked a lot about. We're going to talk about cashback and whether it's taxable or not. Now, the reason why I get asked this question a lot is because there's so many answers that every accountant will give you. And the reason why these answers vary are so wildly is because there's no real answer to this. I mean, there is an answer, but there's a lot of confusion based on the answers you're getting. And I'm going to show you a couple examples of this immediately here. If I do a really quick search on Google that says, is cashback I receive taxable? And what do you see? Well, Forbes, who is a supposedly very knowledgeable place, says no, credit card cashback rewards are not taxable. Which, I typically get asked about credit card cashback rewards, and I'm also getting asked about cashback from places like Rakuten, Top Cashback, places like that off of your cost of goods sold. So you see this, right? Then our cashback rewards taxable income. Even TurboTax says, since a discount is not taxable, there's no need to keep track of all your cash rewards for your tax return. Another one here says the IRS treats cashback rewards as a rebate on spending and not as income, so you're not required to pay income tax on these rewards. Okay. And if you just kind of scroll through here, you see the same thing over and over again. It's all them saying they're rarely taxable. All right. That's the reason why you get a lot of confusion, because if you do a Google search, top 10, 15 results tell you that's not taxable. But the reason why there's so much confusion around this is because this particular search is generally designed for consumers. So if you're a consumer and you're buying items and you are getting cash back for it, it makes logical sense that if it's a rebate against the purchase, that you would not pay taxes on it. And the reason being is because when you buy an item, you're not paying income tax on that item. So any rebate you get against the item you purchased doesn't actually get included in income. Makes 100% logical sense that would be the case. The difference here lies in the fact that you are running a business. That's the difference. So I'm going to pull up the IRS here now, which, keep in mind, this is the small business and self-employed, what is taxable and non-taxable income. The IRS specifically says, generally, an amount included in your income is taxable unless it's specifically exempted by law. Income that is taxable must report in your return as subject to tax. Income that is non-taxable may have to be shown in your tax return, but is not taxable. All right, so the basic gist of it is that if you have any sort of income, it is taxable. Now, just like this said before, okay, it's not income. It's a reward. So here's kind of where the conundrum lies. Let's think about this logically. Let's say you're using Rakuten for cashback and you buy a bunch of inventory. Well, when you're buying the inventory and then you sell it, it gets written off as a deduction for cost of goods sold. When you get that rebate back, what happens? It decreases your cost of goods sold. So inherently, if it decreases your cost of goods sold, then you would have to reflect that in your business because it takes your cost of goods sold and makes it less, which inherently means that you get taxed on the difference. So even though you do these searches that all say is cashback REC taxable, no, it's not. But again, if you see here, it even says, which if you look at the IRS guidelines, it does specifically state that cashback rewards are rebates on spending. And the reason why they see this is, again, there's no guideline that specifically says cashback on Rakuten or these other places are treated this way. There's just case studies that have occurred within the IRS where IRS tax attorneys have put publications out that specifically state that cash rewards are generally not taxable because they're considered rebates, which again makes logical sense. But again, these are all geared towards consumers. None of these are geared towards businesses. And so it then just falls back in line that the way the IRS operates is that everything you make is taxable unless there's a specific exception. There is no specific exception that specifically says that items you buy with cost of goods sold, utilize cash back, is not taxable. There's nothing in the law that says that. And again, it's kind of like this bouncing around of various ideas that makes it open for interpretation. And the reason why you get different answers from different accountants is because of all this. It's open for interpretation at this point because, okay, well, there's this interpretation that says cashback rewards are not taxable. Okay, cut and dry. Cool, not taxable. But if you keep reading further, it's a rebate. And again, if you kind of walk through the logic that I use, it's the same principle. Let's say if it's any other expense, let's say you're using a cashback that gives you 2% on everything you buy for your business. Well, if you're using a 2% cashback credit card to buy, let's say you obviously you're buying everything with your business, but let's just throw an example out there of an expense. Let's say you were buying software service. So it could be SellerAmp, could be Inventory Lab, could be Keepa, any of this good stuff. And you're getting a 2% cashback off of that. Well, again, when you bought those items, you're getting an expense against your income. You're getting a write-off for this. And now that rebate inherently lowers the cost of it, which was an expense, which then lowers that expense, which inherently makes that taxable. So yes, directly, cashback is not taxable. It just adjusts your expenses, which makes it taxable. And so that's the reason why there's like so much confusion out there. And again, if you just think logically through it, that's the way you have to think about it. There are two other things to kind of think about here. One of them is, I hear this a lot from sellers, is that, well, if I never deposit my business, then how does the IRS know? You're 100% accurate. The IRS will likely not know that that money's there if you did not deposit into your business. So we do see sellers make the conscious decision to take their cash back, issue as a check, and deposit into their personal account. If they do that, they are likely skirting the law. And again, this could be considered as a legal gray area. But the likelihood is the IRS will likely never know it even happened or even existed. So like the likelihood of this being a case where it gets found out and you potentially having to pay taxes on it, that sort of thing, is probably pretty low. You'd have to get audited. You'd have to get audited. They'd have to dig into your personal financials and find it out and realize it should have changed your deductions. The likelihood of that happening is very, very low, which is the reason why that the risk profile for this specific strategy for sellers, it's not that much of a risk. But again, likely illegal. It's likely tax fraud. So it's one of those things where you just kind of have to make a conscious decision on what to do. If you're working with an accountant and they know the rules, just like I've outlined in this video, and you tell them, yes, I have it. It's in my business bank account, and their accountant just specifically chooses to tell you it's not taxable. They potentially could get wrapped up if you ever were to get audited on your business side and wonder where all this income came from. They would get wrapped up into that, and it would be potentially their ability to file IRS tax returns with the IRS in the future, which could also put all of their other clients at risk as well, if that was the case. So just kind of keep that in mind, and when you're kind of thinking about what to do with this stuff, again, if you think about it logically, it's taxable. If you think about it from a perspective of, will the IRS ever find out if I deposit my personal account? Probably not. It's a risk you have to take to potentially commit tax fraud. But again, that's up to you as a business owner. So as an accountant, I can't advise doing it because I'm under the assumption that it is taxable based on the law. I mean, again, everything is taxable. There's a reason why that when you have these huge people that have stolen money over years that they could never figure out, that you end up catching them for tax fraud. It's because they had all this illegal income that they never claimed on their taxes. I mean, there's no law that specifically says that illegal funds are exempt from being taxed, which is the reason why it's taxable. Same thing here. So hopefully this clears it up. If you have any specific questions around this, feel free to let me know. But it's a pretty hot topic, and hopefully it cleared it up for you. Thanks.